If you run a wealth advisory business in Australia, the financial value of your practice is substantially tied to the quality and longevity of your client relationships and the funds you manage or advise on. That asset is real, it is defensible, and it generates predictable, recurring revenue. But it is also an asset that traditional lenders often struggle to properly assess or use as the basis for finance decisions. The result is that wealth advisors can find themselves underserved by conventional lending despite having strong and valuable businesses. Here is what is available to wealth advisory businesses, how it works, and what you can realistically access. Wealth advisory businesses have a compelling profile for lenders who understand recurring revenue professional services. Fee-based revenue tied to funds under management creates predictable income streams. Your client relationships are typically long-term, and the regulatory and licensing requirements of the sector create meaningful barriers to entry. Specialist professional services and financial services lenders assess these characteristics very differently from generalist bank lenders. Unsecured business loans provide fast access to working capital for technology investment, compliance costs, marketing, hiring additional advisors or support staff, or managing cash flow during a period of business transition or growth. You can borrow between $10,000 and $500,000 based on your business revenue and bank statements, with approval in 24 to 48 hours. Practice acquisition finance is particularly relevant for wealth advisors looking to acquire a client book or purchase an existing practice. Recurring fee-based revenue tied to a client book is well understood by specialist lenders as a serviceable asset for finance purposes. Structured correctly, the acquired revenue services the loan repayments from day one. A business line of credit works well for wealth advisory businesses managing irregular cash flow, particularly during periods of client onboarding, compliance investment, or market volatility that affects funds under management and therefore fee income. You draw what you need, repay as revenue normalizes, and only pay interest on the outstanding balance. For larger borrowing requirements, significant acquisitions, buying into a partnership, or major operational investment, secure business loans using property as collateral provide access to larger facilities at lower interest rates. How much you can borrow depends on your business revenue, funds under management or advice, trading history, and purpose of the finance. Businesses with strong recurring revenue and clean financials access competitive terms from lenders who understand the sector. Applications take under 20 minutes online. A commercial finance broker familiar with financial services businesses can identify the right lenders for your profile. Brokers are paid by the lender on settlement and do not charge you directly. Use the free business loan finder at Reliable Business Tools to find which loan type suits your wealth advisory business. 6 questions, a clear recommendation, no credit check, and no obligation.